And joining us now to talk more about the market is Jack Albin. He is the founding partner and CIO at Cresset Capital. Good to see you, Jack. Welcome.
Nice to see you too, Sue.
It's been an interesting week, to say the least. We made little progress on trade with the Chinese, especially with what happened today. But we did see a move to the downside in interest rates by the Fed. So how do you feel on this Friday about the market?
Well, I think the Fed is probably as confused as the rest of us. You've got this data-dependent Fed in a headline-driven market. I'm data-dependent too, and I have a real difficult time getting my bearings on where this market is headed. So I certainly can sympathize with some of these Fed policymakers. They did reduce rates. The market really didn't react that much, and I think they've more or less expressed to the market for now that they're done for a while unless conditions change.
At least one Fed official said this week that as long as the consumer is still there, this economy will be fine. And you have to admit, that has been the strength of this economy lately, right?
Absolutely. We did have a little bit of scare earlier in the week with the 10% spike in oil prices. Remember, in recessions past, it was spike in energy prices that really drew away from household expenditures because people have to get to work and pay for gas. That quickly reversed on Tuesday, and it looks as though the consumer is still very healthy. In fact, if you look, one of the statistics that we track is how many miles can you drive on 1 hour's worth of work? And it's still over nearly 300. So it's a very strong number right now.
The market still would like to see lower interest rates from the Fed, but you make the point in your notes that you say low rates are self-defeating, she tried to say. What do you mean by that?
Sure. So what's going on, Sue, is we've now made borrowing so easy among corporate America that even companies that shouldn't be in business are in business. Take, for example, Sears. Sears has been struggling for more than a decade, and even with these lower interest rates allow a company like that to stay in business. Now, perhaps on the surface it seems like a good thing. They still operate nearly 400 stores. They've got 23,000 employees. But what they're doing is they're taking productive capacity away from profitable businesses, and they're also competing with profitable businesses and then holding prices down and productivity down. Two key ingredients that the Fed would like to see higher.
All right, Jack, thank you very much. Jack Albin with Cresset Capital.